Hello everyone, welcome to JAIIB CIB English Medium. My name is Aarti and I hope you all are doing good. So this is your CIB series where we are completing MCQs on based on your previous year topics. Yes, so what you need to do, you need to watch all your Manthan series important sessions, and after that you can use this particular PYQs for your multiple times revision. So without any delay, let's start then today's session with our first question. So first question is, which of the following best describes contingency planning? See, planning means what? Planning means when you are talking about future. Yes, when you decide what you need to do in your future. Correct? So that is what planning, correct? But sometimes whatever you are deciding about future, that you will go with this step, then that step, then after that you will do that step, sometimes because of situations, because of environment, you are not able to perform the same exact steps. Huh? As per planning, might be you're not implementing your or you might see because of the environment you are not able to perform the same planning. So in that case, what people do, people will search for alternative course of action. Yes, alternative plan. And generally we call this alternative plan as your plan B. When your plan A doesn't work, you will shift to your plan B. That is what contingency planning. Because of uncertainties, because of some environmental factors, you are not able to continue with your existing plan, then you will call it as contingency planning. So now let's see what are the options we have. A, identifying and eliminating all risks completely. B, ignoring risks that have a low probability of occurring. C, preparing a detailed action plan to handle adverse events effectively. Or D, avoiding risk by not engaging in risky projects. So contingency planning means what? Identifying and eliminating all risks completely? No. Ignoring risks that have a low probability of occurring, or preparing a detailed action plan to address effectively, or avoiding risk by not engaging in risky projects. So what you can say here, you can say you are preparing detailed action plan to handle that adverse situation, or you are going to avoid risk by not engaging in that project only. So contingency planning means that time you are not going to engage in that risky projects, you will avoid it. Correct? So avoiding risk by not engaging in risky projects, that is means you are going to shift in your new plan. So that is your plan, contingency planning. So here your correct answer is answer C. Now next, which of the following is a key assumption of the zero growth model? See, growth means what? Growth means, suppose in year 1 you in your year 1 you are earning rupees 100. Okay, see, in your year 1 you were earning 100. Okay, in year 2 you are earning now 200. Now in your year 3 you are earning 400. So when you can see this type of a graph, this is your growth. Correct? In first year you used to earn 100, second year 200, third year 400. So you can see there is growth. Correct? There is growth. As you can see here, in your first year you earned 100 units, second year again you earned 100, the next year you earned 200. Means there is some growth in your earning. Correct? Some first 100, then second 100, then 200. So you can see there is one growth. But here they are saying zero growth. Yes, zero growth means what? See, zero growth means whether you earn in your first year, second year, third year, fourth year, okay, your growth is going to be constant over time. Yes, your growth going to be zero. There will be no growth in your earning. That is what zero growth means. Suppose if you are earning 100, you will see there is only 100, 100, 100, 100, 100 till the end. That is your zero growth model. Today also you are earning 100, tomorrow also you will earn 100, day after tomorrow, next year, day after that year. Every year you are going to earn 100. That is what zero growth model. So now let's see which option is your correct option. A, dividends grow at a constant rate over time. B. Dividends remain same indefinitely. C. Earning per share increase every year. D. The company does not pay dividends. So zero growth means we are not talking about any dividends here. We are not saying your growth will be consistent. Yes, no growth you will see. So the correct answer is dividends remain the same indefinitely. Same dividend you will see. There will be no growth, means year one also you are going to earn 100, next also 100, after that 100, same till the life. So here when we are not talking about earning per share. So here your correct answer is your answer B. Now coming to next question, everyone. Which of the following best describes a horizontal merger? Now, merger means what? Let's talk about this term. First, merger. When Reliance merged with, okay, wait. Let's not talk about right now Reliance. Let's take Vodafone. Vodafone, one telecommunication company, and we know one more company, that is Idea. Both, are from your telecommunication sector. After that Jio, they launched that telecommunication project. This Vodafone and Idea, they merged together. Yes, now they both are working together. Now these two separate companies are one company. Correct? So this is one example. You must have heard about Hero, Honda. Yes, Hero is one company and Honda is a one company. But now they both are working different separately. But earlier we used to see Hero Honda bikes. Yes, one company is from I think India and one is from Japanese company, I think. Yes. So this is your merger. Okay, when two different companies they are coming together. So that is a merger. But what is horizontal merger? Now under this merger we have so many types of mergers like horizontal, vertical, yes, conglomerate, congeneric. Yes, so these are different types of mergers we can see when we talk about merger. So here when we say we have horizontal merger means when your competitors are coming together. Yes, when your competitors are coming together. So horizontal merger means like this example, Vodafone plus Idea. Yes, Hero Honda, again both companies that time they used to work in that vehicle segment only. Correct. This Vodafone and Idea, both this company works in what telecommunication sector. So when the same industry companies are coming together, that is your horizontal merger. Correct. Horizontal merger means when your competitors merge together, okay, to reduce competition in that industry. So now let's read the options. A merger between companies operating at different stages of the supply chain. B, merger between companies producing the same or similar products in the same industry. C, merger between manufacturing company and retail company. D, merger aimed at diversifying into a completely unrelated industry. So horizontal means what? When companies producing same or similar products in the same industry. So that's why answer B is your correct. When we talk about supply chain means here is your wholesaler. Okay, before that you have manufacturer, after that you have retailer, then consumer. Yes, so all these chain, when we talk about from raw material supplier till your consumer, this is a supply chain. This is a supply chain. Correct. And if you're merging with your a supplier, or if you are acquiring your retailer, that is your vertical merger. Yes, that is your vertical merger when you are merging with your buyer seller relationship. So this A, B, A, C and D is not your answer. Correct answer is your answer B. Now coming to next question. Which of the following is not a recognized type of performance appraisal? A, self-evaluation. B, peer assessment. C, 360-degree feedback. D, informal gossip-based appraisal. So when we talk about performance appraisal means, suppose this is your financial year, that is your 1st April 24 till 31st March 25. So this is a financial year. During this financial year, as an employee, you are going to work. Yes, after completion of this financial year, your management will evaluate your performance, whether you have achieved your target or you were not able to achieve it, correct? So that evaluation they are going to make. And based on this, they are going to give appraisal, or this time they are not giving you appraisal. This is how they are going to identify based on your performance. So we have so many different ways through which you can say that yes, this time you are going to receive your performance appraisal. So you have basically 4 to 5 options. You have like self-evaluation, peer assessment, 360-degree feedback, yes, then that negotiation appraisal. So self-evaluation means here self, you are providing the data. Yes, as an employee, you are sharing what you have done in previous time. So this time you are only sharing your working. So that is self-evaluation. Then peer assessment means your colleagues, yes, your co-workers, they are going to share that how you performed last year, where you were able to tackle your task, where you were able to complete the task. So peer assessment. 360-degree feedback means your co-workers plus employees, yes, everyone here will give your performance. Yes, everyone will share how you performed last year. So this is 360-degree feedback. And last is informal gossip based appraisal. So here we don't have any such types for informal appraisals. So this is your correct answer. Answer D. Because in this question they're asking about not a recognized type of performance appraisal. So correct answer is your answer D. Now coming to next question. For a project with an initial investment of rupees 1 lakh and an annual cash inflows of 20,000, what is the payback period? Now in this question, we are going to calculate. Yes, so this is a numerical question. Now payback period means what? Payback period means whatever amount you are investing. Yes, whatever amount you are investing, in how many years you can recover it. Invested amount or investment amount, in how many years you can recover it. Yes, that is what your payback period talks about. For example, I'm just giving one quick example. Suppose you purchased one car for rupees 10 lakhs. Okay? Now you are going to use this car for rental purpose. For rental purpose. In every year, you are going to earn rupees 2 lakhs from this car. So now can you tell me in how many years you are able to recover this 10 lakhs? Of course, within 5 years. Yes, you can recover this 10 lakh amount. So here your payback period is your 5 years. Correct? So this is your payback period. Now let's solve this question. So for a project within an initial investment 1 lakh, annual cash inflows of 20,000, what is the payback period? Now see, we have one formula for calculating payback period. That is your invested amount or your investment divided by annual cash flow. But you can use this formula only when you have similar cash flow. So investment equal to 1 lakh divided by 20,000. Yes, so 1 lakh divided by 20,000 means 5 years. So within 5 years, you are going to recover this invested amount. Correct? So here your correct answer is answer C. This is how we need to calculate payback period. Okay, now coming to next question. How does the discounted payback period differ from traditional payback period? See, when we talk about capital budgeting, that capital investment decision, we say we have different methods, and we divide these methods into 2 parts. First, non-discounted methods, then discounted methods. Okay, So under discounted methods, you need to use time value of money. Okay. Under non-discounted methods, you are going to directly calculate, like as a layman, how we are calculating, just in previous question, we are calculating directly without adjusting any inflation part. So under this non-discounted, we have this payback period method and accounting rate of return. Only these two methods we have under non-discounted methods, but under this discounted methods, we have net present value, yes, IRR, then MIRR, then you have profitability ratio. After that, you have this discounted payback period method. So they here in this question they're asking about what is the difference between this payback period. Let me change this color. In this question they're asking about what is the difference between this payback period and this discounted payback period. Yes, I'm so sorry. So you can see here difference is time value of money. What's the difference here? Time value of money. Now let's read the four options. A, it does not consider cash flows beyond the payback point. In both the questions, you are going to stop as soon as you are going to recover your invested amount. So this is not your answer. C, it ignores the initial investment. No. In both the options, in both the methods, you need to consider initial investment. D, it always longer than traditional payback period. No. Okay. And the correct, you can say, difference is your, it uses discounted cash flows to account for the time value of money. So discounted cash flows going to consider time value of money, means there you are going to adjust that inflation. Yes, so correct answer is your answer B. Yes. Now coming to next question. A company has projected cash flows 1 lakh, 1,20,000, 1,40,000 for the next 3 years. If the discount rate is 10%, what is the present value of these cash flows? So here we need to calculate present value of cash flows. Year 1, 2, 3. Future cash flows, you can see here, that is your 1 lakh, 1,20,000 and 1,40,000. Okay, so what discounting rate? You can see here 10%. So 1 divided by 1.10. See, this is the formula you need to use here. Okay, so 0.909 for the first year. How you will use it? Everyone write 1 divided by 1.10. 1 divided by 1.10. Okay, and n you will change as per your year. If you are calculating for the first year, just press 1 time equal to. So you will receive 0.909. For the second year, press this equal to button for 2 times. 0.826. For third year, just press equal to button for 1 time or 3 times. That is 0.751. So these are the present value factor. Now, for calculating present value of cash flows, you need to multiply this future cash flow column with present value factor. A into B. 1 lakh into 0.909, that is 90,000, sorry, 90,900. 1,20,000 into 0.826, 99,120. Last 1,40,000 into 0.751, 105,140. So what is your present value answer? 9,900 plus 99,120 plus 105,140, 295,160. This is the final answer, and this is what they asked in this question. Correct? So this is how you need to calculate present value. Okay. So one more thing, if you haven't started a preparation for your CIB, then you can join our last conceptual batch. But remember, here you will receive recordings plus live classes. Okay, all 4 batches, all 4 compulsory subject classes you will receive. That is your ABM, ABFM, BFM, BRBL. Yes, and this batch known as ACE batch. You will receive live classes, recordings, mock tests, ebooks. Yes, And apart from this, if you want, Mahapack. Now under Mahapack, you will receive ACE batch, you will receive crash course, you will receive your revision batch as well. Upcoming batches. So here you will receive all your further batches here. So for that, you can use this Mahapack if you don't want to enroll it again and again. Apart from this, you can see mock test, ebooks and videos. Yes, so these are our upcoming batches, and if you have any inquiry regarding your this batches, or if you have any confusion related to your CIB, make sure you are calling on this number. Yes, through this number you can contact the 24/7 team, and they will guide you, they will help you in your query. Yes, so number is 981 981 9247, 981 981 9247. Yes, and if you want to purchase batches, you can use one more coupon code, that is Y895. And remember, this is my Telegram group. You can use this, you can scan this, and you will be the part of my Telegram group. So in case if you are doing ABFM and if you face any doubt, you can ask me through this. So now I am winding up this session.